On Hot Picks today, we're focusing on transport and logistics companies. Our guest says FedEx is his top idea. He reckons it's positioned to benefit from growth in e-commerce. We're joined by Jason Seidl, analyst in transportation and logistics at TD Cowen. Jason, great to see you. Give us your case on FedEx. What attracts you to this stock?
Sure, Andy. Well, listen, it's great to be here, and happy Thanksgiving to all the U.S. Listeners out there.
Sure.
So, look, FedEx right now, when you look at the where it's trading at roughly in line with its historic average. But remember, the company is going to be breaking out its LTL division for investors. So we're really looking at this thing as a sum of the parts, because your LTL business tends to trade at a much higher multiple than does your parcel portion. Near term, don't expect a lot out of FedEx or even UPS when you're looking at the parcel guys. Peak season expectations, I'd say, are somewhat muted. Your business from your larger customers is probably in line with historical trends in terms of your peak season expectations, where your SMBs are a little bit more muted. In other words, people that probably can't shift as much with the changes in the tariffs and everything else. But the good news is that both FedEx and UPS are remaining very, very disciplined on pricing. Now, you can't overlook a recent tragedy with that UPS had with one of its freighters. The MD-11s are grounded for both carriers right now. It's a workhorse for a lot of them, but it's not a large percentage of either of their fleets. FedEx, it's actually a little bit smaller. It's about 4% versus 9% at UPS. We're expecting these guys to really just sort of shift a little bit more to the ground, maybe deploy some extra spare aircraft and adjust some of the maintenance schedules going forward, and even probably take advantage of some of the belly space of some of the consumer airlines that are out there. Longer term, when you look at FedEx, one of the things I think that excites investors is really looking at the changes that they have in their network that's coming, because most people don't remember that FedEx was actually created by just an air network, and then they added the ground later. So they're really going to be right-sizing their network going forward. Instead of having two FedEx truck stop at your house, they're going to try to go to one in as many places as possible.
Right. So that was that deadly plane crash in Kentucky, forcing UPS and FedEx to ground their fleet. Yeah, 14 people killed in that one. GXO Logistics, remind us what they're all about and what attracts you there, Jason, please.
Sure. So, when you look at GXO, they're basically an automated warehouse provider and really a supply chain coordinator. When you look at automation in the transportation space, a lot's focused on automated trucks and sort of that's on the come, but it's been on the come for many years right now. There's also automated talk on the rail side, but there's a lot of pushback there as well. There's really no pushback on the warehousing front, and this is where they play. There's a new CEO that came in recently, Patrick Kelleher. He's come over from DHL, very well respected in the supply chain. He's refocusing the company on sort of organic growth and expanding into some areas that tend to be a little bit higher margin. But the really interesting thing about these guys is they tend to lock up long-term contracts, and the renewal rate on these contracts are in the 90+% range. When you look at what they've locked up for 2026 through the third quarter, it's almost where we're expecting them to grow all in. So they've got a lot of their growth already locked in. We suspect when they report 4Q, they'll have almost $1 billion in revenue booked for 2026 in new contracts. So there's an exciting story there, and also a recent acquisition that they did, Wincanton, that was held up by the British regulators, is set to pay some dividends right now. So it was held up, so they really couldn't take advantage of some of the cost savings. We expect that to flow through about $60 million for their EBITDA. And then on top of that, we expect that to allow them to expand more into the A&D consumer base, which should position the company in the years to come.
And then finally, Knight Swift Transportation, KNX in New York. What's distinctive about them, Jason?
Yeah, well, I'll start off by saying in the U.S. trucking space, things are bad. So that's there's no way to get around this right now. But really, and we've been in the downturn, by the way, for over 3 years, the longest I've seen in my 30-plus year career in logistics. That's the bad news. The good news is we're starting to see ways capacity can come out of the marketplace. And a lot of that has been driven by the government. So the FMCSA, which is under the DOT, has issued several rulings. The biggest one out there is the non-domiciled driver ruling. And we estimate that that can impact roughly 8% of the capacity over a 2-year period of time. Now, that's stayed in the courts right now. We expect that stayed probably be lifted or maybe sent back to the FMCSA. But that's a lot of capacity to take out of the marketplace, which should, all other things being equal, help pricing. You add on top of that some English language proficiency testing that should take some drivers out of the marketplace, as well as illegally issued CDLs, commercial driver's licenses. Those things will be taking capacity out. Recently, California was hit with 17,000 taken out of the marketplace. That's almost 9% of their CDL capacity. Now, mind you, maybe not all of those were active, but still, this is a way to take that capacity out of the marketplace and provide some much needed help to the U.S. trucking industry, which has been really sort of under the thumb of lower pricing for the better part of, like I said, 3 years.
And just what went on with those driving licenses? There was fraud in the system?
Well, unfortunately, there's been a lot of fraud in the system. I mean, you have what they call CDL mills, which will get you your CDL in 1 day. Think about that. You can get a driver's license to drive an 80,000-pound vehicle in 1 day. There's a lot of issues right now that they're looking to correct, and a lot of it is around safety. So I know there's, a lot of it's been politicized, unfortunately, but when you look at the things that they're doing, the focus is on safety, and that makes a lot of sense.
And is this kind of fraud happening in Canada as well? Can you give us any color on that?
Yeah, Canada's had some issues too with some of the some illegal drivers coming up, sort of setting up shop and then closing down really quickly and moving around. They have their issues as well. So it's not just the U.S. I don't want to paint such a bleak picture for my home country, but it is an absolute problem. And on top of that, you have violations of the cabotage rule, right? Like, so when you're looking at drivers that are supposed to come in, let's say from Mexico and drop off a load and then go back, they're not allowed to solicit other business once they're in the U.S. And I believe typically they have about 7 days to do so. You're finding a lot of these drivers are staying up to like 20 plus days in the country and are probably soliciting other work. So there's a lot of stuff that they're looking at right now to curtail that capacity that's expanded so much sort of post the COVID supply chain situation.
Jason, thank you very much. You gave us great insight there. Really appreciate it. Jason Seidl has been our guest analyst in transportation and logistics at TD Cowen.